little technical.
Did you go technical on that?
I went technical on it. Yeah.
That's good.
I had to do a few adjustment settings.
Whoa.
Yeah,
Are
multiple.
you okay?
I need a break.
You need to go golfing. That's what you need.
Yeah, I need to go golfing or something like that. Everything okay?
Everything is wonderful.
Great.
Un momento, por favor.
Okay. Is this part of the show? You texting other people?
No. Well, maybe. It might make it in. It might make it in. It might be the most interesting part of today's show.
Depends on how lazy the editor is today.
The editor's been pretty lazy.
It's okay. It's all good. You know, we're not paying him a lot, so.
No, he is.
No, I figure. I'm a firm believer in you get what you pay for.
Well, and when the whole work from home thing started, we told him, you know, if you're not going to come into the studio anymore, we're going to slash it by 30%. I think that's reasonable.
Yeah. And when you're paying so little, 30%'s quite a bit to slash.
But when you're getting paid so little, like, what's the point of complaining?
Seriously. When it's so low, whether it's
like,
30,
what's the
50,
difference?
80% slashing, you're really still just one above slave labor.
Unfortunate, but you, like you said, you get what you pay for. So we have a guest joining us today. I will allow him entry. We have Zach Walpole. Is that how you say it?
Zach Walpole. There he is.
Walpole. Oops, that's not the button I meant.
I always say pool. Walpole.
Well, maybe it is pool. Maybe you're saying it right.
Definitely spelled pool. Hey,
there
Zach.
he is.
How are you?
Good. How are you guys?
I can hear you. I can't see you though, Zach.
Oh, sorry. My apologies.
That's okay. We were just debating on the pronunciation of your last name because Walpole is what everyone's always called you, but I'm sure that's, you know, Walpole is the alternative.
Walpole is the correct.
Pronunciation.
Darryl's known you for 30 seconds. He's already beat me out. Look at that.
Listen, I live a similar fate. Everybody calls me Frankfurt, which, I mean,
That's
there's
German.
an O. It's an O. There's no O that makes a sound.
But you look German.
I might look a little German. Thank you.
Yeah.
Thank you.
Frankfurt.
Well, welcome to the show, sir.
Yeah, we're live. We're ready to go here. We're ready to go here, Zach.
We just jump in and bombard you.
I'm ready.
But usually I do an intro that I screw up. So I'm going to try to screw this one up again.
Can you do this?
So Zach
quickly?
is a good friend of mine. Known him for many years. He's a carpenter by trade, but got into building and construction. He's now into real estate investment, father of two, and looking to take over the world and, retire early. There you go.
Nailed that one, buddy. You nailed that one.
There you go. There you go.
The retire early part?
I did it good. Well, retirement's like, you know how retirement, no one wants to retire. You just do different things.
Right.
Freedom.
My dad just retired.
Freedom. Freedom.
My dad just retired. He has no idea what to do with himself.
Yeah.
Well, for sure. And I think
really
that's pretty common, right? With people when they get that age, right? And then they're just lost, right? So I think you got to keep going. You got to keep finding things, hobbies and stuff that'll keep you busy for sure, right? So
keep you motivated.
I want to work on the deals until I'm 80. I want to work on the deals until someone says that I signed a contract and that I was not mentally capable of agreeing to those terms anymore. That's what I want to do.
All you need to do is DocuSign it now. That's
right.
Right.
Yeah. So, that'll be a biometric signature by that point. Hopefully I live that long.
But they can just slap your hand or cut out your eye.
True. Yeah. Right. But I want to have at least 2 court cases before I die where people are arguing whether I was legally capable of signing that contract due to my age.
You want to get your insurance money's worth out of ARIA, right?
Yeah. Big time.
Get those fees worth.
I'm working on that.
Sue me.
How you guys doing today?
We're great. Yeah. Sunday morning. This is what we do every Sunday.
Sunday,
over a year.
Yeah, I know. That's awesome. You guys are doing big things. And I want to say congratulations. And obviously, thanks for having me. Really appreciate it.
Yeah, I'm
thanks
interested.
for coming.
I got a whole bunch of questions. For you.
Talk to me, man.
Start it off, Darryl. What kind of questions you got?
Well, I mean, first and foremost, okay, so it seems to me just from the little bit of research that I did, you're some form of general contractor.
Yeah.
Talk to us about the pricing of materials and just what kind of lineup you have right now waiting for your services.
Okay, so obviously, during the summer, the prices and spring, the prices of lumber were obviously ridiculous. But people didn't stop, right? Like people were, our lives were turned upside down for over a year and a half. So people had money to spend and they wanted to improve their living space and they wanted to do this. They didn't know what to do, right? So might as well make your home a little more livable, a little more living space, whatever it is. So yeah, it's been pretty busy. Obviously, with acquiring a couple properties this year, income properties, I've been kind of back and forth. My properties are in Cornwall, so I've been back and forth a little bit. Yeah, Cornwall. It's far, but the value's there. The value is there.
It's not the distance. It's just it reminds me of Beavis and Butthead for some reason. Cornwall. Sorry.
I think it was an undervalued market, but we'll talk about that
everything
later.
must.
Yeah,
for sure.
Gotta be good.
You were building a house the last time at Leslie. The last time we spoke about a job you're doing.
Yeah, so I was the lead carpenter. I work for a bunch of different contractors, general contractors.
Mm-hmm.
I've never really had the drive to expand because I see. Sorry, my dog's right here. I see. Okay. The headaches these guys have running 5, 6, 7, 8, 10 jobs. And that's just something I don't want. I'm comfortable where I am. So I framed this giant house, the biggest house I've ever framed at Leslie and Lawrence, 5,400 square feet. But through that, there was delays. We couldn't get, I-joists. The roof package was 7 times more expensive than what he got originally quoted a year ago.
The roof package, meaning like the plywood or the trusses?
The trusses, the plywood, all that stuff. So I think he got quoted $7,500 originally, and it was close to $45,000.
Yeah, $45,000 and late, and on top of it, all the interest you got to pay while you're waiting for all that stuff. 100%. And then you lose your carpenters because they go where somebody has money to pay, and on top of, and on top of, and on top of, and next thing you know, holy shit, there goes $100,000. Boom.
100%. And the guy that I'm working for, who I was working for at the time, Forbes Lilford, he's a realtor in Toronto. He's a really good guy.
Who isn't?
Super resilient. Yeah, realtor, right?
All realtors are good
resilient. So he was just taking the punches as they came, right? And he's doing all right. He's a builder too, right? So he knows these things are. I don't think he expected.
These things don't normally happen. This is crazy. Yeah. This was nuts.
Depends when he sold the house.
And bought it. And
he hasn't sold it yet.
Originally.
Okay, so he's okay. He didn't. It's the guys who sold it in January of 2020, and then we're building it in August of 2020, who are the ones losing their shirts.
Yeah, but those aren't custom home guys. Those are the subdivision guys. He's talking about like a custom home guy.
That's what I'm saying. When it matters when you sell the property.
For sure.
And buy. Like if he bought it 7 years ago, then who the hell cares what's going on, right?
Yeah, exactly.
I think he's owned it for 3 years. I think him and his partner. Okay. So, and they've always wanted to tear it down. So I guess the timing wasn't great on this one, but they'll be all right. They'll be all right.
Yeah, Leslie and Lawrence, fantastic little pocket there.
And it's a really cool design. It's not a typical design. It's a little different than one of those big custom home designs. So it's got like, the round turret roofs and all that stuff. So it's gonna be nice, man. It's
still more traditional than the contemporary stuff. Yeah. I think the contemporary stuff is nice. Is that more expensive? I know. There's a few of them that I like.
There's a few of them that I like. Believe it or not.
So that's what I was going to ask.
Depends. It depends. Yeah. Really good modern is fucking expensive because everything is like straight and flat. There's no forgiveness anywhere and seamless. Everybody doesn't want to see a seam anywhere, right? Okay. So it's like drywall goes right down to the floor exactly.
That's what he did. His whole first floor, there's not one bulkhead.
Yeah.
Upstairs, no bulkhead.
Which is so hard or so expensive.
Yeah.
How does that work then when you're framing a place with no bulkhead? So where's everything going? Where are they hiding everything?
So he just has this vision of this house, and he pre-planned, right? He knows that he also builds houses in Florida's big Airbnbs near Disney. So he's been in the game for a while, and he knows that, just like you're saying, when you walk into that house and everything's open and clean and no bulkheads, you're going to get a little bit of a premium on that, right? So he just built a 2x6 wall, and everything just kind of ties into that 2x6 wall all the way up and all the way down. All the plumbing, obviously not everything. There's a few little bulkheads here and there, but not noticeable. Nothing on the ceiling, stuff like that, right? So he just pre-planned it, and he knows what he wants, and he knows what sells. Obviously, he's a realtor as well. So yeah. Smart. Yeah, it was a good experience though. It was one of the biggest house I built. So it was good. It was good to add to the portfolios, right? So
you have no shortage of work ever?
No, man. I do a lot of things solo. I have a bunch of trades that I call when I need. I do a lot of work down on the Danforth. Most of the contractors I know, they work down on the Danforth. And it's good down there because it's tight, but there's no shortage of work. It's very dense with population, so people are constantly renovating their places and everything.
Pain in the butt to work down in downtown Toronto and Danforth and all these places, right? To get materials at the back of the house and
oh my god,
back of the house. Yeah,
try working in a condo in Queens Quay and doing a renovation. It's condos
like ridiculous. Yeah,
I think there's worse condos, like probably Yorkville. Like you have no parking. They're just like, you can't park here. They're like, I don't care what you do with those materials. You're not parking anywhere on site. You can just trolley them in from the subway.
It's a disaster.
Yeah.
You got to pass it from one crane to another crane onto your site.
Yeah. Yeah. That's
miles away.
So
hold on. So okay. So you're a carpenter by trade. You work for other people. You saved up a little war chest and you decided that you're going to park it in Cornwall. So let's talk about Cornwall. Cornwall must be, I just read an article this week about Brantford being like the most undervalued city in Ontario, but like places like Cornwall and I guess everywhere are just going bananas, right?
Yeah, everything's just expanding like that urban sprawl, right? People can't afford to live in Toronto right now, especially like millennials. It's hard to afford a house. So obviously they're not going to Cornwall, but you're just getting that urban sprawl expansion, right? So
retirees going to Cornwall, anybody who's looking to just cash out, like when you cash out of Toronto, you're like, okay, Oshawa, Cobourg, Belleville. But when you cash out of Belleville, where do you go? Right? You're going to Cornwall, you're going to Sudbury, wherever. You got to go to these other places that are much smaller because that's your retirement plan. Yeah. So I think the growth is huge, and they're not building a lot in Cornwall, I imagine.
They're actually starting. Yeah. Right near my first property, like literally 2 minutes away, they have this whole new subdivision there. The houses are going for 600,000 brand new, 2,500 square foot. Yeah. So, and it's right near the water, St. Lawrence College, St. Lawrence River. So they're doing a lot of expansion on the waterfront as well. A few small rise condos.
Condos in Cornwall? What the hell's going on? So hold on a sec. Let's talk about some numbers here. Yeah. What do you pay for a house in Cornwall? What kind of house? What'd you get? What kind of lawn or yard? What size? Give us the breakdown here.
The houses are pretty old in some of the neighborhoods. Like we're talking 1900, 120 years old. So you can imagine with a house that age, the problems that come with it. Nothing major for the most part, but
some of them are built way better than new houses.
Yeah, for sure. But when I'm walking in a lot of these houses doing walkthroughs, the basement is supported by the floor joists are supported by
2x4s.
Like logs, like pieces of wood. Yeah. Like round logs that are 6 feet high and just holding up like a beam on the floor, right? So, but no, I mean, a lot of the population, a lot of renters there. Not the average household income isn't huge, but the value's there. So our first property, we paid $135.
What?
For a duplex.
What?
Yeah. This property had a fire. It's an up and down duplex. It had a fire upstairs. It was already gutted when we got the property.
Vacant possession.
What's that?
Vacant possession. It's beautiful.
Yeah.
Right? Vacant unit.
By death.
Yeah. And we also got seller financing on that one. So
yeah, I'll bet. What did it smell like in there after the fire?
It actually smells better now, but you could smell the charred fire. It was a dryer fire apparently. And there was also a small garage on this property that was also burnt down. House fires are pretty not common there, but they happen more often than not, I think.
Part of the retirement plan, maybe, out in Cornwall.
That's how you get vacant possession real quick over there.
Yeah, no, right?
Make sure you get the valuables out, Martha. We got 8 days to retirement plan. See,
gotta put some kindling in the dryer duct work again. You know, get that thing going.
We're gonna burn this thing down and then sell it to some sucker from Toronto.
Yeah, totally right.
135 though. How can you go wrong? And you're doing the work. You're doing the work yourself. You're going there and getting it all fixed up, right?
How much did you put in? How much did you have to put in?
Okay, so my line of business, I'm looking for money partners. I am the active partner. So if you're
JVing all these deals.
Yes.
Join the club. Yeah.
So I haven't put any money in, to be honest, and that's kind of what I do.
So the partnership though, like somebody, like let's go through real numbers here. So you pay 135. The consortium needs to spend how much money to get this thing rentable?
Okay, so to start, there's already a tenant in the downstairs unit. So we're already positive cash flowing, like net positive cash flowing, even with that one tenant.
How much does that one tenant pay?
900 plus utilities, 2-bedroom.
900. So are you going to be able to get 900 for upstairs as well?
We're going to get 1,200, maybe 13.
1,200. Okay. So hold on. We're at 2,200 for something that cost 100. You had to put in 100 grand, no?
So we put down 25,000 as a down payment to the seller. Yeah. He financed the property for us for a year at 3%. So the remaining
he hold a first mortgage for the balance, 110,000.
Yes,
3%. Awesome. And how much do you have to put in for renos?
50.
50.
Trying to stay at 50. Yeah.
Okay, so let's say you're wrong on the budget because that's what happens. Let's go 75. So we're at 200,000 plus closing and blah blah blah. We're bringing in $2,100 a month.
Yeah,
that is a winner.
Yes,
right, TK. That's a winner.
Big time.
It's a winner for everybody except for the realtor who only got a commission on 135 grand and had to split it with somebody else. Why would you go to Cornwall?
You need to find a hotter market. Now, what do you expect to get it appraised at when it's all done? What are you hoping for? What's your best case scenario?
Hold on, but that was the home run. What about this? What was the other one? That's a double, single? Was it just as good a deal?
Let's just focus on the first deal here, Darryl. Hold on. So what do you think the ARV is? Like, where do you expect it to be at the end?
Conservatively 240.
Okay.
I think before we go to refinance it, we're going to redo all the siding. Yep. And that's just going to give it that extra pop.
So 240 gets you all the money out, gets you the first mortgage back, gets you your rental costs. 250 and because your closing costs. That's right. Okay.
That's at a $75,000 budget. If we keep it at 50 and we refinance, we're going to be getting a check for $5,000 each when we refinance.
Yeah.
And now
this property
will be cash flowing with nothing in. Yeah. $400 or $500.
Rinse and repeat.
Right. Exactly. Exactly.
Sweet. Awesome.
Yeah. So I mean,
but can you rinse and repeat? Can you find another one for 135?
Let's hear deal number 2, Darryl.
Yeah,
let's find out. Let's test this theory.
I was jumping the gun there.
Deal number 2 actually fell through.
Yeah, nobody starts with their worst of the 2 deals.
There's
they
a couple
start with the home run.
There's a couple. Deal 2 fell through the day before closing because what happened was when we went to get title insurance, our lawyer, for some reason, had the fire department go through this property in Cornwall.
What?
Yep. The fire department tells us we need a sprinkler system installed in this property.
Why? How many units?
For the retrofit.
For 2 units.
Sprinklers?
Yes.
Well, if they don't have fire separation, an option is a sprinkler. The quickest fix is a sprinkler system.
But the problem is that
because of the entrance, probably
3% of the houses there are not fire code, up to fire code, right? So it was really a fluke that this all happened, and it taught me a lot.
I've never heard of a lawyer doing that in my entire life.
Right?
That's crazy.
So, and my realtor over there, he's like,
was it a part of the mortgage instructions?
My lawyer's telling me the title insurance, they wanted that
Title insurance
inspection to
company
take
did.
place. So, the sprinkler systems, 3-4 grand, whatever it is, plus a few other small fixes. So we tried to renegotiate with the seller. They only wanted to give us $1,200 off, and it just fell through. We couldn't go forward because the numbers didn't work if we had to pay $4,000, an extra $4,000. Now that one had tenants already, and they didn't really seem like they wanted to budge on any of their, what they're paying currently. Not that that's a problem. I had no problem working with these people, but it just kind of puts everything into perspective that you're getting into this game and it's going to be tough, right? So
yeah, I'm selling a property right now where the guy's been there since 1982, paying $900. So in Toronto, and another unit in the building's rented at 18.
yeah,
Right. So you really never know, right? People
tough.
can say, look, I'm here. I don't care. Offer me $100,000. I'm not going anywhere.
Yeah.
I'm happy. I don't want to move.
Yeah, 100%.
Yeah.
So even with the tenants in that one, it was
feel them out.
still, it was cash flowing $300 a month, which is perfectly fine. I mean, but yeah, it fell through. And, I guess you never really close on a deal until the keys are in your hands, right? That's something that I definitely learned as well, right? Like, so, but it was a good experience. I mean, that's all I took from it was I had to learn from it, and that's all I could do, right?
Did you lose anything like broker's fees and things like that? Like, did you have to put up some upfront cash that you lost on that one?
Yeah. So like I got an inspection. Obviously, I got it appraised, so that was $1,500. And then we had to pay some of the lawyer's fees. She gave us a deal because it fell through. So it was $2,100, but
part of the game.
Worth it. It was worth
So
it.
This all sounds really weird, like negotiating and having time for inspections. Like, what the hell? What planet are you in? Is that really happening in Ontario?
I know, man. It was a tough one. It was a tough one, but yeah, like with the sprinkler system, it's like, what do you do, right? Like, what do you do?
What was the purchase price of that one?
Yeah,
that one was 226.
Closer. So finished. So you didn't have to do the renos. This was just a rental and it was going to hold. You were going to try to do some forced appreciation by getting the rents up and taking the tenants out. You weren't going to be fixing it up like the other one.
Yeah.
It
So
still needed some work.
The main unit was a three bedroom. It was actually really nice. It was nice for, it was nice. It was decent. Yeah. And they were also paying $900 plus their utilities, which was fine. And then the back unit was a 1-bedroom that needed a little bit of work. It wasn't gross by any stretch of the imagination, but you could have definitely improved the value by doing, your paint, your vinyl flooring, spruce up the bathroom, take out a little bit of carpet, that stuff. Right. So, you
were thinking like what, 10, 20 grand though, putting in that property, doing it yourself?
Yeah, exactly. Yeah. And then the real potential there was the lot. A lot of these lots are pretty big. Like I'm talking, 60 by 110, 120. So I'm thinking down the line, they're going to start allowing these secondary dwelling units eventually, because they've done that in a few places in Ontario so far. And obviously there's a housing shortage in Ontario. So they're going to allow these secondary dwelling units, which is something that I definitely want to get into at some point. And then also the basement there. The basement at this property had potential for a third unit. The basement floor wasn't poured concrete. It was just like the stone that they left. But that almost saves you time because then you don't have to chip up all the concrete when you're doing like an underpinning.
Probably means you don't have a footing too.
No, it had footings and everything.
Yeah.
Yeah, this was just the floor. They had done some plumbing work, but they never re-poured the concrete.
Oh, I see.
Yeah. So the plumbing in that place, the plumbing was all new, 2 brand new furnaces, 2 brand new hot water tanks, all new duct work, new roof.
2 furnaces. So the tenants are paying their own gas.
The front unit was, the back unit wasn't. She was paying $640 all in.
Ouch.
And you get in there and she's got a big freezer chest and she's got heaters going. She's got an AC unit over here. And it's like,
yeah, hydro's included, right? She's growing weed in the garage.
Right.
Yeah.
Right.
Yeah.
So that's one thing about Cornwall is their hydro is very cheap because they get it from Quebec, which has some of the cheapest hydro rates. So cost of living out there is very cheap. That's one of the reasons why.
How much cheaper could it be that it reduces the cost of living? Like, what's your hydro bill a month here?
Here in Toronto or here?
Yeah. Well, what could the savings possibly?
Well, in the wintertime, electric heat here is like ludicrous. where in like Quebec, other like Eastern provinces, electric heat is normal and landlords pay for it. And it's
But
not
that big a
$400 a
difference
month.
that it's life changing.
Well,
Yeah,
bottom
well,
line is it's
it's one of the
possible.
factors. It's
Yeah.
one of the factors, right?
When your rent's $600 and you don't have to pay a $300 heating bill, that's a
Crazy.
pretty significant savings, right?
$600. You need to have a fire in that basement. It sounds like.
No more fires. No more fires. Too many fires.
Uh,
So yeah, I
Did I
mean,
say that out loud?
okay, so that deal fell apart.
Yes.
And I've it makes sense, but I like there's a lot of title insurance I'm definitely no expert on, but I guess that's what they're seeing in Cornwall, and
They must have seen it in Cornwall.
so they're saying
yeah.
we better start doing this to protect themselves.
Yeah.
And unfortunately, you were on the wrong end of that one.
Yeah,
So.
yeah.
Well, or the right one. I mean, if you had a fire and somebody, God forbid, got hurt or died, you'd be liable up the wazoo for that.
Yeah, exactly.
Yeah.
Especially
Your responsibility, regardless, to make sure that people don't die in the houses you live in.
Yeah, totally. And that's something my partner and I talked about, right? We were like, okay, if we need to
it's their fault.
Yeah, if we need to install the sprinkler system, we'll do it, because then that will, obviously, liability reasons, that will save us, right? But we're not going to install it at our cost, right? We want to negotiate with the seller, but they just didn't budge, so it just wasn't worth it, especially with the liability. That was the main thing, right? We were thinking ahead, and it's like, if a fire happens, if someone, God forbid, dies, we're going to get screwed here, right? So,
but what,
do you know if
is
they
there an
sold
exit strategy? Like, are you guys planning to flip them, or are you going to hold them?
so it's the Burr method, which is the buy, rehab,
Hold it,
refinance, repeat. So the idea is that you try and get out as much capital as possible when you go to refinance. And then you have very little money in the property, but you have this asset that's cash flowing $150 per door for as long. So usually my JV partnerships that I have in place right now are 5-year partnerships. So
what happens in 5 years?
What happens in 5 years?
Well, just obviously, as every year passes, your return on investment is greater, right? You got your mortgage pay down, you have your depreciation, you have your taxes, you have your cash flow.
Okay,
so
but after 5 years, and I say
Who
I
gets
want to
the
hold on to
property?
I want to hold on to this sucker,
Yep.
Zach, and I don't want to sell. I'm making my $150 a door, and I'm going to hang on to this until I'm dead.
Yeah.
Do I have to buy you out?
Yeah. Yeah. So, ideally, I think the 5 years is just kind of the first phase of the entire project, I would say.
Mhm.
Because for me, I would love to keep all these houses for 25 years and have them cash flowing, 100, 200, whatever it is, right? Because you're just building your passive income and your equity and your wealth, essentially, right? So, but I don't think it makes sense to enter into a 25-year agreement with someone and be like, okay, we're just going to hold this house for 25 years, right? So you just kind of go 5 years at a time. That's when your biggest return on investment is. You're looking at over 100% if you look at the numbers over 5 years, and then it only gets greater, right? 10 years, you're looking at 200% return on investment.
Well, if you're not putting any money in the deal,
that's the thing, right? That's how you got to look at it, right? If you're getting most of your capital back and you have very little in, your return on investment is huge, right?
Okay. And I'm not saying you're right or wrong, because really it could be in every scenario is right. Every scenario is wrong. It depends on the variables.
Right?
Yeah. It depends on what you're looking for. They're all in a personal name though. You're holding the properties in a personal name?
Yes. Yeah.
Okay. Because that's another limitation that I'm sure you think about, right? Is how many times can I continue to do this? And if I partner up with TK and that's not the racehorse of a deal that I'm hoping for, I need to get out so I can go and put my money into something else that's going to get me the returns again.
Yeah.
Right?
Totally. So for me, I'm looking for money partners. I'm the active partner. I'm finding the deals. I'm sourcing all the labor. I'm, getting my off-market properties. I'm, doing all the property management, getting everything set in place. I'm looking for money partners, someone that can come up with the down payment, closing costs, renovation costs, and their name on the mortgage, right?
And their name on the mortgage. Okay, so what do I get for all that?
50,
and how much do I need?
Well, you find the deal. That's the hardest part, is Zach finding the deals.
We're talking in the $230,000, $40,000, $180,000 range, right?
Yeah, I mean,
Is this a rinse and repeat Cornwall special?
yeah, I had a wholesaler send me a deal 2 days ago, 135,000 for a livable duplex. So if you get your 20% in, long-term tenants though, that's the problem.
And is this the same formula over and over? Like you need that first mortgage from the seller?
No, you like if you know if my
That's the fire property because you can't get financing, right? The fire property. Yeah.
Right, exactly. This one that the wholesaler sent me is livable. There's tenants in it already, so you just do a conventional mortgage, right?
Who's guaranteeing that loan?
Partner.
Partner.
The money partner. Yeah. Okay. Yeah, that makes sense. So then for you, then it's just a personal choice then that you want to be out in 5 years. That's what you feel is maximizing your returns.
I just think it's the proper way to structure the first phase of the deal, right? I don't want to, I want people to see that in 5 years, you're going to make $20,000 in equity and you're going to make $25,000 in cash flow and you're going to make XXX, right? So, because that's how you really, when someone's paying down your mortgage, you're not looking at that money. So if they're paying $1,000 a month down on your mortgage, that money's just kind of tucked away and saved. But then in 5 years, when you look at it, you're like, oh shit, I have $40,000 here, right? So you can refinance the property, use that money to go buy 2 more properties. You can sell it. You can buy the other partner out. You can keep it forever, right? So
now, if you had a hold co, if you had a company though, a corporation, again, devil's advocate, you could actually be able to buy out those partners though, right? And you could start a business basically. And so because you'd be able to refinance it and get the financing based on the cash flow, that would be an alternative instead of them buying you out. You then take over all the property so you don't have a partner anymore.
Yeah.
Right.
Yeah.
That would be.
So yeah, like incorporating, I think it's hard because that corporation needs assets to buy a property. Right.
If you get a small commercial loan, you will finance under corporation names.
Yeah.
Right. Which is something that you can explore too. There is really good financing for corporations out there.
Yeah.
And it's about you and it's about your track record and all that stuff. But if you keep accumulating them, then you can start putting them into a company name and it's not going to be the partner's name or your personal name. So it won't tie you up as far as, your debt service ratios and all that kind of stuff.
Yeah. There will be that point when,
they're still protected though, your partners.
Yeah. Either way, whatever. You don't have to decide today. You got 5 years to figure that out.
So, but tell me, okay, so what is the plan? Is the plan like, is Cornwall a stepping stone to whatever is the next city on the list? Like, what's the upgrade from Cornwall? Where do we jump from Cornwall to where?
Cornwall is the foundation, yes, because of the value. So the more I can accumulate in the next year, 2 years, the better. And then we start moving west. So we look at Kingston, which is a big university town. You have Belleville.
Cornwall's east of Kingston?
Cornwall is, yes,
as east as it gets.
The furthest eastern city in Ontario.
West to Kingston, I was like, one of us is confused with their directions. Wow. Okay, that's far. Okay, that makes a lot of sense now. Okay.
West to Kingston.
Is there a Walmart out there?
Walmart's one of the biggest employers out there. They have a distribution center out there. They just pumped in like $18 million to build a new one and revamp their old one. And it's the biggest distribution center in Canada for Walmart.
That's important, right? Is there enough housing there? Did we we found a hidden gem here, didn't we, TK?
We did it. I think it's on the up and up. Now the population hasn't grown in 10 years. So
you're in danger because like all 5 of our listeners are gonna head to Cornwall now and just run up that market. This is a pump and dump.
Yeah.
There's already guys there.
It's gonna go up 10% from 135 to 148.
There's guys there already just snatching up properties. So I have that realtor matrix and the property will come on the MLS and it's undervalued, conditional the first day. Like I see it like every day, daily. So there's obviously other people recognizing what the value is there right now too, right? So
well, I got a lot of questions too. So is there another deal? You said deal 2 fell.
Yeah. So I'm closing on a triplex on September 30th. Fingers crossed.
Okay. We won't jinx it.
That triplex is $250,000. It's on a very nice street. It's right on the corner of 2 main roads. The house beside it, right on the corner, is also a triplex, then our triplex. And then it's all single family homes that were built probably in the 50s, but these people definitely keep their yards up to date. And so our triplex is kind of a, it's ugly, right? So I'm sure people would love to see us clean that up, which we are going to do. Huge lot. And there's also a small piece of property at the back that's about 30 by 50, which is outside of the backyard, which has, again, huge potential one day for that secondary dwelling unit. So currently tenanted. Currently cash flows $500 as is with the tenants. It's 2 1-bedrooms and 1 2-bedroom. Yeah, this is going to be
Fire separations.
Nope.
Uh-oh.
Nope. But that's the thing. None of these houses have that, right?
Mm-hmm.
So we switched lawyers, to say the least. We got a local lawyer.
Smart.
Different insurance company, maybe.
Don't go to that other title company, okay?
Yeah.
Let's find another one.
So
you'll find out. I mean, there's ways to put things in the contract. Like we warrant
when did that happen,
retrofit in a lot of contracts in Toronto.
Day before closing last time, right? You gotta cross your
but if the seller warrants it though, and then you get the seller to pay for it, right? So if the seller warrants that the fire retrofit's there, right? Or that there's no outstanding fire retrofit requirements on closing, and then have your lawyer send the fire department in a week before, and now there'll be some outstanding fire retrofit requirements, right? So
the problem is that literally none of these houses have fireproofing. None.
Yeah.
These houses
are in Ontario, and Ontario.
No, they didn't start. They probably didn't start as triplexes. They probably single family houses got all chopped up, right?
Well, this one's actually a legal triplex, but again, just it was built.
Fire retrofit is just the updated version. So yeah, whenever it was built, it was to code, and so now.
Oh, so that's all that matters.
It's the zoning requirements that you're talking zoning requirements, because it was built that way. It's allowed. That's why it's legal.
You don't have to change anything unless you're going in for a permit. Like if you just leave
if the fire department comes in, exactly. So that if you don't touch anything or do anything, you're okay. But the second the fire department comes in, they're gonna find stuff.
Trying to avoid that at all costs this time around.
Yeah. So what's that? That's like $85,000 a door. Did I do my math right?
Yeah.
$85,000 per door. In Toronto, we're at like 400,000 per door, I think.
Ridiculous.
Maybe even more depending on where it is, a little less depending on where it is. That's a good spread. I mean, the rental rates seem to be a little bit lower, but
they're half, but you're paying 25%. Yeah.
Yeah, exactly. Right. The rent's low, but the numbers work, right? So
now what's the plan there? So buy for $250. It's fully tenanted.
Yeah.
Cash flowing $500 a month.
Yeah.
What's your best case scenario for the next 5 years?
Best case scenario is, so doing the numbers, I think we can get 350 after it's all repaired. Refinance that 350, and then you update all the rents, cash flowing $1,500 a month after refinance.
After you smoke out the current tenants?
Yeah.
Do you have management out there? What are you doing for management?
I've obviously, as I've been out there, I've contacted a lot of people. I'm trying to build a team. It's hard to build a team out there when you can't like talk to these people face to face. So every time
they have internet out there.
I know, I know, it's crazy.
But that's the plan, right? Is to get it managed for you?
I think I'm going to go with the boots on the ground strategy. So, have a guy that can go around, pay him $20 an hour, shovel the driveway, cut the grass. Because the idea is that when you renovate these properties, hopefully you don't have to do much fixing on them as you go. Obviously, repair costs will be added into the budget, but if you don't have to use those repair costs, then that's just extra kind of cash flow that you can use at some point, right? So,
So for as far as the tenants goes, you're going to deal with the tenants, the tenancy side. You're going to deal with them. That's the agreement that you have with your partners, right?
Yeah.
Is that you're managing them. So do you have any strategies like cash for keys or anything else? Like, are you getting familiar with Residential Tenancies Act to see if there's any violations or anything like that? Is that
for sure? I mean,
part of the plan?
I think we all know that landlords don't have too many rights. I shouldn't say rights, but they don't have the power essentially, right? So I think it's more tilted towards the tenants, which is fine. But yes, I think cash for keys is probably the easiest solution. But some people just don't want to leave, right? So you have to just deal with it in the best way that you can, right?
Mhm.
Be nice, maybe help them find another place, you know, pay for their moving, stuff like
What's
that.
that smell, TK? What are you noticing a smell lately, honey?
No,
I
you know
can't
what?
deal with this anymore.
You know what? It's tough. You know why? I have a good heart and I'm a good guy. So it's a very fine line to draw between displacing people from their house, which I don't want to do, and running a business, right? So you have to just be
You
just
create a
gotta
win-win. No, you create a win-win.
yes, exactly.
You're never going to bully people out of their unit
No.
and be a
That's not what
dick
I'm
and
yeah,
pay them off. It doesn't work.
exactly.
Okay. I manage a lot of properties, like, for a long time. Everybody will hate you. And then they will actually, I've been taken to
They dig their
landlord
heels in
tenant board,
even
or
more.
my, I had a client who had a counterclaim because the tenants owed us money, and they had a counterclaim because they said I was harassing them, you know? So
Yeah,
there's only so much you can do, right? Like you can't,
for sure.
you got to literally stop showing up at the property if they feel you're harassing them, and you can only send them legal notices. So you have to be really careful.
Yeah.
And
I worked on a project, a renovation down on Pembroke Street, which is like Wellesley and Parliament area, I think. I forget where, somewhere around there. Not the best area ever. This was a fourplex, and they wanted to convert it into condos. So they literally were gutting the whole place, and one set of tenants on the top floor refused to move out. We took the roof off this house with them living in it. Like we literally took the roof off. The roof was off for like 3 days. We put a whole new roof on, and they were like, "You are not kicking us out of our house.
Wow.
Like, fuck you." And it was like, I'm renovating around these two guys, and they're like very, very upset that they don't have a roof anymore. It was crazy, but this is what happens. Tenant landlords, it's like it can get not friendly.
So
yeah,
there's a stigma there in Cornwall. Um, you know, it's a little bit below middle class in some of the areas, but the problem is that all these landlords are based, not all of them, I shouldn't say all of them. They're all, most of them are slumlords. So they buy these properties, they don't fix them up. They collect their government assistance check, and people are living in squalor, right? And it's gross, right? So I want to change that. Obviously, I'm not that type of person. Not that I will change it, but if I start creating these relationships with people on a positive note, that will only lead to better things, right? So
so you're
there's
going to
definitely
buy the
that
slumlords properties and help these people get into nice, clean units, right? And it'll
deal.
help if you have multiple properties and you can move them from one to the other
Exactly.
and
What
offer
happens
them
to the guy that was
suitable
living
housing.
in the slum? Where does he
He's
go?
he offers them a better place, or another Toronto investor who's cleaned up another property. You
He
find him
can't
another
afford
place.
that. He can afford the slum. That's why he
Well,
lives in the slum. There's actually apparently a market for slummy apartments, right? Like lots of people live
The
in them,
best
clearly,
market. It's the best market
right?
there.
If there was no market, there wouldn't be any of them because
yeah.
people are there to make money. So, but seriously, this is part of people's problems. This is why people, get aggressive and crazy because if you're used to paying 650, even though there's crap on the walls and there's no floor in some places and you love your place and you can't even barely afford 650, well, now what the fuck, right?
Yeah, for sure. For sure.
Because if you're
Um,
already in
And you're
Cornwall
in
living
Cornwall.
like
I was
that,
about to
like where the
say,
fuck are you going?
there's no further east to go. You can't just leave the city,
yeah.
right?
Now you got to learn French if you go any further.
Yeah, you got to
Who
go to
wants to do that?
the rural parts. The rural
Like in
parts you
like
can,
serious French, like the
yeah.
kind no one understands.
Yeah, exactly. Exactly.
So it seems like a great strategy. It seems like you're kicking ass and you're doing really well, which
Yeah.
is awesome. Who's your, like, do you have a coach? Do you have a program that you follow, a book? Like, what is, obviously Rich Dad, Poor Dad? We're all, this is where everybody starts. Everybody's read that book, and like
Oh,
that's
most
where we
people we
go.
ask haven't read that book.
That is the
No,
Bible.
investors though,
That's
investors have
Yeah.
all read that book.
Guys
Yeah.
doing what he's doing are
Yeah.
definitely that's what spurs most
Where did you go
things.
from there?
Okay, so TK, we've known each other for a long time. How many
Yeah.
times in the past 10, 15 years have I said, hey, find me a property. Let's flip a property, right? Those
Yeah.
were always dreams. I've always dreamed about flipping a property.
Yeah.
This year, I finally decided to take it seriously. I started with Rich Dad Poor Dad, which I've never read. I read it on January 1st. I finished it in like a day, and it just switched everything. And I was like,
Yes.
what have I been doing? What have I been doing for 20 years?
Yeah.
I've been circling my wheels nonstop, right?
The rat race.
The Rat Race. From there, I read Money People Deal by Stefan Arnio. Great book. I've read it twice. I listened to it on my rides to Cornwall, coincidentally. Great book. That's how you find the money, the people, the deal. Love that book. And then I kept reading, kept educating myself, listening to podcasts. And finally, in March, I connected with a guy. His name's Riley Oikel. He's based out of Ajax. I heard him on a podcast. I reached out to him. We connected, and he told me that he had a course that he was starting.
I thought Ajax was east.
Nice. I know, right? So we connected. He tells me about his course. It's how to buy your first income property course. That starts in March. I was thinking about it for a few weeks. I was like, you know what? I'm going to do it. I have to do it. So I ended up doing that. And he literally, shout out to Riley Oikel, by the way. Is there
a website or something like that? You can
RileyOickle.com. Yeah.
How do you spell Oikel?
Oickle. He's a Nova Scotian boy. He went to University of London, Western. Yeah, great guy. The package he puts together in this course, it's called My First Income Property Program, is flawless. Everything you need to know from finding the deal all the way to the bookkeeping, it's all in there. He gives it all to you. It's up to you to go and get it, essentially. So that was a 2-month course, and my first.
And you just gave it all away for free right here in 45 minutes.
I know, right?
Wow.
No, it's a concept that it takes a little bit of understanding the BRRRR strategy. People don't get the refinancing part, right? They don't understand that you can go back to the bank and be like, hey, my house is worth more now. I want to pull this out, the cash out refinance, right? So that was a hard concept for me to even grasp, the refinance part, right? How do you get all your capital back? How do you make all your money back? So it takes people time. You really got to dig deep, look at all the numbers, do your research, get educated. And it'll all make sense eventually, but it's hard to get to that conclusion, I guess. But I took the course, and then within that course is how I got my first deal. One of my cohorts in that course actually came upon our
connection.
Is he in Cornwall? Oh,
sorry, say it again. Lost you there. You had a connection.
One of your cohorts were,
and then they found you the firehouse.
One of my cohorts, he was looking in Cornwall actively, and he's the one that found that house. The seller actually contacted him through an ad on Kijiji. Another little secret, if anyone's out there trying to find deals, go on Kijiji. I know everyone's doing it now, but he found the house. So he went to see the property, but he never went into the upstairs unit because it was boarded off. So he had to close on the property, and he basically asked me if I wanted to partner with him, and I was like, yeah, for sure. I'm not putting any money in. Damn right I am. And so we went to go see the property, and I kind of we opened the boards. I took the plywood off and everything. I looked around. I was like, oh shit, there's a little bit of work here. And I don't think he understood that at the time, but we've created a great relationship. Him and I have taken him through, he's kind of handling all the bookkeeping and stuff like that. I'm doing all the renos and that stuff. So, but yeah, man, no, it's been good. And again, the Rich Dad Poor Dad, that just completely opens your eyes to what's possible out there, and what 90% or 80% of the population don't realize is that, I think the way to wealth is buying assets that produce cash flow through leverage, right? You pay a little bit of money, you have this giant asset, and that's kind of the way to build wealth, in my opinion, anyways. But I know a lot of people have done it too, right? So
Riley is the money guy?
No, Riley's my mentor.
Mentor, right? So, but you said he's involved in the deal, or he offered you?
No, another guy who's in the course with him.
Yeah.
So who's the money?
The money guy is one of my.
Where'd he come from? How'd you find him?
He was one of my fellow students in the Riley Oikel First Income Program property. He was in my cohort, and he.
So in Riley's course, you met the guy who introduced you to the property, and you met the dude who brought in the money.
Same guy. Yep.
It's great.
Same guy.
Same guy brought in the
You
money.
got a return
and
on
found you
investment. Riley's return on investment for whatever his course costs is not even in the information in the course. It was in the guy that
Beyond
we met in the
infinite.
course.
Well, that's what it
Yeah.
is. Your network is your net worth, they say, right? So, and
Yeah.
that's one thing that I haven't done for 10 years is.
So, but hold on
I've
a
been
sec.
a
I'm
family-
confused.
Yeah, go ahead.
So the guy found the property and had the money and
Couldn't
gave
do
you
the
half
renos.
the deal for doing the renos.
And
Well,
managing and everything else. He's got a huge role to play. for this.
Wow, what a score!
We
Yeah.
had developed a relationship while we were doing the course. So all these guys, I think there was 7 of us that started, but only 3 of us had ended up finishing the course. Because it's a lot, right? It's a lot of work. You're trying to set up your business. You're trying to, it's a lot. So we had developed a relationship during the course, and, maybe it was week 5 and he had found this deal. And I think it was a trust factor, right? He knew that I did renos, and it was a trust factor between him because he probably couldn't manage it by himself with some randoms in Cornwall, right? So once we
So
started,
Riley got nothing out of this deal other than the fact that you guys all paid for his course.
yep.
Wow, Riley
doesn't
got
need it.
fucked here. Riley got the
No,
short
Riley
end of the
doesn't-
stick.
No.
Riley just
No,
wants
it's good.
to see
He played his
if we
part.
succeed-
Yeah.
if we
He should take a
succeed-
piece of every deal. He should take a little piece of every
Sign up for
deal.
Darryl Frankfort's
Yeah,
course right
That's
now.
right, where you get hosed right off the bat.
if you find any deals beyond what was advertised, you owe a percentage.
No, Riley.
Um,
Riley just wants to see us succeed. The more we succeed, the better he looks. The better we look. The better
For sure.
review we give him on his. But he's been doing it for I think 3 years, and he's learned from another big shot in the Canadian real estate investing market. So he's good. He's doing his thing. He's good.
So one of the biggest roadblocks in any investor's journey is fear.
Yes.
It's not money. It's not deals. It's
Yes.
not the market. It's not time. It's fear, right? What would you say is your secret weapon against fear?
Secret weapon against fear. I don't know. I've been scared to do it for 15 years.
And you beat it this year. What's the difference?
Fear is a natural emotion that is designed to trick us in a sense. It's a fight or flight kind of thing. As humans, we're trained to survive. So that means we're thinking about what might happen before we actually do something, when really you can't think like that. Fear is just an emotion designed to trick our minds, right? And that's what I've learned, right? If you want to really get serious about anything, you could be anything. You could do anything you want. You put your mind to it, you put everything to the side, focus on it, and you can achieve anything you want. Anyone in the world can do it, right?
Nice.
Yeah, I don't know. A lot of people are scared. I'm talking to potential investors trying to JV with me, and they're like, oh, what if the market crashes? Oh, it's not the good time to get in the market. Oh, what if we lose our money? Stuff like that, right? And I know
The market's going to crash. What
Didn't
do
it
they know?
crash already?
What do they know?
We had
Oh
a
my
crash,
gosh.
man. This thing crashed like hell. It just bounced
Yeah.
back really quick.
We
That's a good question.
There's a good analogy, and that is and it's said a lot in the real estate investment circles. Trying to find out all the details about your deal is like waiting on a stretch of road for all the lights to turn green before you go, right?
Yeah.
So once all the lights are green for 5 miles, then I'm going to go, and you'll end up just staying at those lights the whole time, right? And that's what it is. You have no idea what's going to happen in a real estate deal. Nobody does.
Exactly.
And if you're waiting to have all the answers, you'll be waiting. That's what you'll be doing.
For sure. And I think, successful real estate investors, or any investor for that matter, you have to be resilient, because you will fail, and there will be mistakes, and there will be failures along the way. But if you can get past those, then, you should be fine. And I'm a resilient dude, man. I'm a gritty dude. So I'm on a 5-year plan right now, boys. Acquire as many properties as I can, and not retire, but be able to wake up in 5 years from now and be like, you know what? I don't want to go build this deck today, or, I want to go, to the beach today, or go to Cuba, or whatever the situation is. Right. So that's what I'm focused on. And that's what I'm going to go get. So. Yeah.
Beautiful.
Yeah, man.
Confidence is dripping through the Zoom call into me. I can feel it.
That's how you
TK?
got to think, though.
There's
Right?
a there's a place
going to
there's a place
Cornwall.
for guys. No, you're handy, you're hardworking, you're self-employed, so you're not limited by like a 40-hour work week where it's like I can only go after 6 p.m. or I can only go right. So there's a lot of assets, I think, and tools that you bring to any JV deal. And if somebody's looking like the guy you met, who's like, I got the money, but I don't, it's a fire, it's Cornwall, I got to use a GPS to get like all these things, the excuses. And if
Yeah.
you're willing to do all those parts, I think that you would make a great partner for like a ton of people out there who could close on a property for 200 grand with 50 grand. Like, like it's not a big expense to buy what you're buying. And I think
Not a
that if
big
you can
risk
get
either.
not a big risk either, right? So if you can put your name out there, I don't know how many projects you can handle at a time, but you could almost go, full time once your cash flow builds up. You could go full time and not have to worry about doing a deck, like you said, and just be relying on the cash flow to pay your bills and just keep on going around JVing these projects. And you could start a company that there's a lot of these companies that exist already that only renovates rentals, right?
Yeah.
So the bigger players, they own a construction company and they only renovate their own rentals. They don't do business for anybody else because they have so many properties, like they're burning apartment buildings and stuff. They're doing full-time renovations all the time somewhere. So
yeah, for sure. I mean, the possibilities are endless within this real estate investing world, man. You can still want to flip houses. I want to get into those secondary units. Just keep pushing.
Like garden suites, right?
Appreciate the kind words though, for sure, man. Thanks, brother.
Secondary units, I think, are different than garden suites because there's no laneway. It's like a separate.
That's what I'm just trying to clarify.
On the property, yeah. So it'd be like a little apartment at the back of a property, but it
which is garden suite. Garden suite is not laneway housing. Your laneway housing is
yeah. Sorry. Yeah, same thing then. Yeah.
Yeah. Okay. So just the house where they got to walk from the front yard to the backyard, and then they go into another separate building.
Yeah, I think I don't think we're too far off, but like garden suites are already,
in Cornwall.
They're working on them in Toronto right now. Markham, you can have them. There's a few areas like York
region doing some moves
right now. Just build the damn thing. No one's gonna fucking know.
Your neighbors, those fucking neighbors.
I think the biggest challenge with those secondary units on the back of the property is the plumbing, right? You have to dig to this, you have to connect your plumbing lines. That's the biggest challenge, and the electrical, right? Because you need to bring those utilities over to your
outhouse,
secondary dwelling unit, right?
Outhouse. Solve the slumlord situation in Cornwall with outhouses. Right?
One of our very first guests has a place in Toronto, and he's just building things anywhere. They're giving him stop work orders, and he's like, I own it. It's mine. Yeah. I'm building.
Really, I'm building. If you're not going to sell, it really doesn't.
You're
they
never
can order you to tear it down.
Yeah.
For sure.
What are they going to do? They might slap you with some fines, but if you got enough cash flow, you can cover them.
Cover the fines.
For the fines.
I think
sell the property for like double.
I think there's big value in taking also a single family home and kind of converting the basement to a legal basement unit. That will obviously increase the property value and whatnot as well. So that's a good strategy for the burr. In Belleville right now, you can get a single family home for $300,000, right? Convert it and it'll be worth $455,000, right? So that's another.
That's the next closest big market.
That's the closest one to Toronto.
But the next big thing is going to be when they start allowing 3 triplexes and 4 quadplexes, whatever they're called, in the green belts, in the neighborhood areas, and being somebody that's like expert at converting these single family houses into like 4plexes.
The yellow belts. Yeah. The yellow belt area. Yeah.
What did I say?
You said green. Yeah. But I know what you're saying.
Green. Yeah. Yellow belt.
The yellow belt. Once you're right.
Neighborhood.
Those guys are going to make a killing.
Those guys are going to make a killing, especially.
There's a few of those guys now that I've been following a long time. They're good.
They have to go, right? Like there's still a housing shortage, and they're allowing more immigrants in, and the population's going to keep growing, but they don't have enough housing, right? So it's going to be a lot of triplexes, duplexes, low rises, maybe, right?
If you got a 2-story, make it a triplex. Why are we so like you can only add 1 unit, right?
It's funny because. Like last show, I was like, where are all these people living? And so I think the answer was, I don't even know where this came from, but like there's multiple families living in the same house. And then I started thinking like, hold on, there must be so many unreported people living in houses. Because just in my area where I live currently, like if I walk around, some of these houses definitely have 7 entrances. right? And definitely have people like coming out of windows as their regular egress from their suite that they're renting for $250 a month, right? So like there's got to be all these like illegal 7-8 plexes or rooming houses all over that don't have it reported that there's 8 people living in the house.
Until they
It's
go
like
to sell.
one owner.
Yeah, when they go to
So
sell,
they
and then
try
it's
and sell. It's disgusting.
legal 4-unit with 3 extra units or whatever, right? Seller does not warrant retrofit status of the 3 basement apartments.
Yeah.
This was super informative. This was great. Thanks for
great show today.
the lesson.
Thanks, gentlemen.
What about you? How can people reach you, Zach? So we got listeners, they're investors, they want to learn, they want to partner with you. They like, how do they get in touch with you?
You can go to my Instagram page. My company is called Jake Ella Investments. There's not too much on there right now, but I'm working on it. Also working on a website right now currently. JakeEllaInvestments.com. It's up. It's not complete.
Spell the Instagram account.
JAKELLA Investments. It's a combination of my 2 children's first names. So that's kind of why I went for it, because that's pretty much why I'm doing all this, because of my beauties. So
for sure.
And then my website, you can hit me up. You can call me anytime. You can find me on Facebook, on Instagram, any of that stuff. But anyone that wants to JV partner out there that's looking to get into the real estate market, income properties, give me a shout anytime. Look forward to hearing from you.
Beauty.
Thanks
for being on the show today,
sir. Thank you very much.
Appreciate it. Keep up the good work. All right. And hope to hear from you guys soon.
Yes, TK, keep up the good work, sir.